Welcome to the efficiency revolution. More than 10 different companies can be owned in one fund and offer investors a pathway to sustainable growth and profitability. So get your notes ready, as we will teach you a strategy that will change the way you think about investing forever. Hello everybody, and welcome back to Finance Frog, where we save smart and invest smarter. Today we'll be talking about the concept and efficiency of ETFs. If you have not already, like, subscribe and hit that notification bell for all future videos. Without further ado, let's begin. Back in 1990, on one chilly Canadian day, a fund with multiple stocks, bonds and currencies was born. It was the first ever ETF created, and easily paved the way for various ETFs to be created and publicly established across the United States. The first ETF created in the United States was SPY, and from there on, there have been many funds as such. From December 2020 to December 2023, the number of ETFs in the US grew by 1,011 in just 3 short years. As of March 2024, there are over 3,000 ETFs in the US, and that number will continue to grow. So, what is an ETF? An ETF is an abbreviation for Exchange Traded Fund. In short, ETFs are investment products that are a combination of stocks, bonds, and other commodities that aim to mirror the performance of the specific sector or index. All ETFs must be registered with the Securities and Exchange Commission and are subject to the Investment Company Act of 1940 unless they obtain modified rules. Instead of investing in just individual stocks or bonds, investors can put their money into ETFs and capitalize on the returns of multiple investments in one. The purchasing process is the exact same way you would purchase any other stock or bond. And on top of that, ETFs can be actively or passively managed by fund managers, and many require fewer broker commissions and lower expense ratios. Now, there are various types of ETFs and strategies. Today, we'll be looking at 10 different types of ETFs. The first is a passive ETF. Passive ETFs seek to mimic the performance of a broader index, whether it is a diversified one like the S&P 500 or a more focused sector or trend. The second is an actively managed ETF. Actively managed ETFs ensure indexing in a favor of portfolio managers, active selections of securities, offering advantages over passive ETFs but potentially occur in higher costs for investors. The third is a bond ETF. Bond ETFs serve to offer consistent investor income, derived distributions from the performance of underlying bonds, comprising government, corporate, and municipal bonds without a maturity date. The fourth is a stock ETF. Stock ETFs, which mirror specific industries or sectors such as automotive or foreign stocks, aim to offer diversified exposure to that industry. The fifth is a sector industry ETF. Sector industry specific funds concentrate on particular industries, with an energy sector ETF comprising companies within the energy sector, and so on. The sixth is a commodity ETF. They invest in commodities such as crude oil or gold. The seventh is a currency ETF. They follow the movement and currency pairs involving domestic and foreign currencies. The eighth is a Bitcoin ETF. These ETFs enable investors to access Bitcoin's price fluctuations through their standard brokerage accounts by buying and holding Bitcoin as the underlying assets. The ninth is an inverse ETF. They make profits when stocks decrease in value by short selling them. Last but not least, the 10th ETF type is a leveraged ETF. A leveraged ETF aims to provide returns that are multipliers of 2 times to 3 times of the return of the underlying investment. Now you know the types of ETFs, so let's take a look at VOO. VOO, or the Vanguard S&P 500 ETF, is one of the most popular ETFs and aims to mirror the performance of the S&P 500. It has holdings in many big-time sectors. As of May 2024, the top 3 sectors that it is invested in is 30.1% in technology, 12.6% in financial services, and 12.3% in healthcare. As for holdings, the top 3 stocks in VOO include 6.8% of Microsoft, 5.8% in Apple, and 5% in Nvidia. VOO is a very well diversified ETF, and it has investments in over 10 different sectors and has over 5 of the biggest stocks in the S&P 500. On top of that, it has a very great track record and has shown steady returns dating all the way back from its creation date in 2010. Other popular and solid ETFs include VTI, QQQ, and SCHD. Many investment platforms and brokers allow you to purchase and sell ETFs. ETFs can be on a little more of the expensive side, as VOO is currently standing at $511 a share. But some platforms allow partial buys where you can purchase part of a share and still reap all of the benefits such as the returns, dividends, etc. Think about an apple pie. Cut a piece off and you're still going to taste the same amazing flavors as everyone else. ETFs can be very powerful and efficient investments that can easily help diversify your portfolio. They can almost guarantee you returns in the long run, especially in certain types of portfolios. For example, if they are purchasing a Roth IRA, they have lots of time to grow, and when are sold at a certain time are completely tax-free, unlike if they were purchasing a regular stock portfolio. Roth IRAs are a must-have if you want to seamlessly become a millionaire. If you would like to become an almost guaranteed millionaire, please check out the video above. Other than that, we'll see you in the next one. Remember to always save smart and invest smarter.